Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so let's hop on into the news and then into the charts. So tomorrow is a pretty big day. So February 1st, we have a couple of things that we're going to be looking out for. So we have the PMI for manufacturing for the S&P and the materials, and then we also have the crude oil inventories, and then we have the big stuff coming later into the afternoon. So we have the interest rate decision, we have the rate statement, and then we have the press conference with Jerome Powell. So this is going to be really pushing the markets around. So when we get towards like 1 p.m. around my time, markets will start coming alive. And then we'll also have some earnings from some tech companies. So Meta is going to be a big one as well. So big day tomorrow. And then February 2nd, same thing. Got the initial jobless claims, got some factory order stuff. That's going to be important to see. The labor cost stuff. A lot of stuff is going to have a lot of effect on the economy, at least how it's going to be viewed going forward. And then we have a bunch of other earnings like Alphabet, Amazon, Qualcomm, etc. It's going to be a lot of stuff. And then February 3rd, non-farm payrolls, average earnings, bunch of big stuff, big news over the next 3 days. Okay, so watch out for volatility. That's what we're looking for. We're used to this now, right? Every month, or almost every month, it feels like we're used to this. All right, and remember, we're also coming into the monthly closing candles. All right, so we're gonna get into that as we go through the chart. So starting off with the dollar. So dollar broke down from the ascending trend line, but has actually come back, testing it out. And look at this failure so far. So kind of failing off of this zone here. So I'm curious to see how much strength we're gonna have as we get closer towards tomorrow afternoon, because I am expecting for most of tomorrow to be a fairly slow day prior to 1 p.m. So I'm looking for it kind of to chop around just like it did today. We really didn't have many big movers in the market, so I'm kind of seeing that being a repeat for most of the day tomorrow until we get towards the rate decision and then the discussion after, right? Once that happens, then we'll see what the dollar's going to do. But so far it is showing some weakness, okay, as it's come back up towards this ascending trend line, but it's still holding this relative general zone. So I have been looking for a pop up in the dollar at some point to at least come back and test this fair value gap and potentially even higher, right? I was looking for it over here, we didn't get it. We did get it slightly here where it came towards these fair value gaps, failed off of them, and then immediately dumped. Now I am looking for a move down towards the 100.39 to essentially down towards 97.32 if we start to fail off of this trend line decisively, right? And the way I would describe that is if we start taking out this low right here, so about 101.5. So if we start taking out 101.5, I'd be looking for a continuation of this trend down towards 100.39. But right now, it is more likely we're going to sit around here, and then once we come in towards the Fed's rate decision is when we'll start getting some answers. All right, next is the Dow. So Dow coming back up towards this fair value gap, looking to take more liquidity. Now, this is not a confirmed triangle or anything like that. I just kind of had this drawn out from before, just playing around, kind of getting an idea of what I'm looking at. But as of right now, the Dow is trying to get that strength to break through. But like I've said, tomorrow's going to be a big day to where, depending on what's discussed and depending on what's decided on, the Dow could immediately start to dump down and break down. And right now, Dow's not looking too bad for a continuous, continuing this consolidation, right? So it is coming up here. I do think it's going to have some trouble actually breaking out prior to the Fed's talk. Okay, if it does start breaking out prior to the Fed's talk, I will be a little suspicious that we are going to have a pretty hawkish report, and that may bring the Dow down. Okay, so we're going to watch this very closely, but overall I am fairly bullish on the Dow, but I am seeing a bullish pullback that should look to come a little bit deeper before we go up any higher. But again, we'll see. We'll let the charts show us the way. As of right now, watch for this to kind of continues to trade in this consolidation, this tightening structure, this triangle. Next is the S&P. So S&P really trying to take back all this the loss yesterday, and it did, right? Sold down earlier in the day, came right back up, and just closed right above yesterday's high. Very strong, I would say, very, very strong look. But again, gotta be very careful not to get caught up in this. We have to wait and see how the markets are going to absorb whatever the Fed decides in regards to the rate decision, and then how Jerome Powell discusses it. Right? But overall, I am looking for more upside for the S&P, similar to the Dow, to where I am looking forward to get towards these fair value gaps a little bit higher up here for the S&P. And then for the Dow, I would not be shocked if we do break up a little bit higher, grab some liquidity above this high pivot, maybe even this high pivot, come back up towards about 34.8, and then we may see some strength to the downside, right? We might see some selling, unless, of course, the Fed does start getting really, really dovish. Then the sky's the limit at that point. We might start breaking towards the 35, which is my ultimate level where I'd be looking for any major correction. So from 35 all the way to 36.5 is my major level. That's that zone of, okay, we can correct down and start and continue the macro bear trend anytime. Next is NASDAQ. So NASDAQ, like I said, look for it to break up hard if it starts taking out this high wick, and that's exactly what it did, and came into this fair value gap and has been tapping into this liquidity. And I still think there's more upside for it to come in and kind of fill out most of this fair value gap and tap into the low end of the green zone here. So I think the NASDAQ has a little bit more room to go, but it's getting more and more extended. It's not super overextended, but it's getting there. It is looking pretty ready though for that next little move higher, just to grab a little bit more liquidity, and then I'd be looking forward to potentially start reversing as it gets closer towards 12.4 to 12.5. All right, next is the oil chart. So let's take a quick look at oil. Oh boy, so oil came back up. Just like tapped the very bottom end, or just missed it, just kissed that zone right there at the bottom end of this bearish fair value gap. Had a bit of a pullback, came into this fair value gap and had a beautiful pop from there. So grab the liquidity here, popped up higher, and just making a potentially another higher low from this structure. So we do have a bit of a grinding structure here. So this could be fairly bearish looking, right? So we have this grinding structure, and then we may get a bit of a tightening structure here, something like this. So we could be seeing something a little bearish that may bring us further down back towards 60 bucks. Okay, now this is going to be very dependent on what's about to happen tomorrow, right? So depending on how weak the dollar or strong the dollar gets, oil will have a serious reaction to that. Now let's just say they come out pretty dovish, which isn't to be expected. It's more likely they don't. It's more likely they do come out more hawkish than dovish. But if they do come out dovish, oil is probably going to skyrocket. If they do come out fairly hawkish, depending on the rate at which the dollar strengthens, oil will probably have a bit of a sell-off. All right. Either way, it doesn't really change anything. Oil is still super super bullish. When you start looking at it from the monthly time frame, it's super bullish, but it is ready to potentially start breaking up higher as we get towards the get further into the winter, and then Europe starts having some issues in regards to its supplies for oil. So I'm ready any day for this to potentially spike up. But it is on the chart, looking at it technically, could definitely break down easily, back down towards 60, and it still will be bullish on the monthly. For this to actually change, in my opinion, it's bias bullish. It'd have to take out this descending trend line here, because on the monthly chart, this broke this descending trend line bullish. This is looking like it wants to come back and test, potentially all the way down there. It's not likely right now, unless something changes in regards to the dollar. Right now, I'm seeing this just kind of trade within this monthly bullish structure, this descending structure, and it's been bouncing off the bottom of it, and so far it looks ready to have that continuation towards the top side of that structure, so towards the 90s and higher. All right, next is gold and silver. So gold, man, how strong has gold been, right? I mean, broke up, filled a bunch of bear fair value gaps up here, so we took those off, and now trying to actually have that pullback to the downside to at least come and touch these fair value gaps down here, but they just won't let it. There's just so much bullishness here. But again, this, like oil, will be highly affected by what happens with the Fed tomorrow. Again, if the dollar strengthens really hard, then obviously watch for gold to pull back pretty aggressively. But if it weakens, gold, I mean, sky's the limit, right? I'm looking for 2,000. to be a major ceiling level for gold. Now I do think 2000 will eventually be broken, but once we get towards the zone, I will be looking for a major retracement back. But as I'm looking at price action now, I'm still looking for that retracement back. I do think it could happen, but this daily candle that just closed is admittedly extremely strong, very, very strong. So depending on what happens tomorrow, my thesis can change on gold to where we just shoot up to the 2000 before any major pullback. Okay, so we do have to wait and see what happens tomorrow with the dollar, but this is very strong. Okay, very, very strong. Next is silver. So silver, again, not as decisively bullish as gold, right? So like it is in this consolidation, hasn't really changed, but we're seeing it's clearly been wicking into this fair value gap zone over and over and over, and finding the liquidity to shoot up higher, right? So there's clearly a fight here with the bulls and the bears. If we do have that continuous pullback on gold, look for it to happen on silver, but the longer we trade here, the more interesting it becomes that we may actually hold this. But looking at this price action is telling me that it's more likely that we will have a bit more of a pullback down towards this fair value gap down here to grab some liquidity, at least under this fractal, under this pivot. But again, we'll see what happens. We'll see what happens. All this is going to be really decided by the Fed and then how the dollar reacts to that news. All right, next is Bitcoin. So let's take a quick look at Bitcoin, see what's happening here. So Bitcoin finally had a pretty decisive bear candle, right? It's been quite some time since we've actually seen that nice bearish engulfing. So this does imply continuation to the downside. Now this is happening at the monthly close, right? So I'm going to pull up the monthly chart in 1 second, but look what we've had. We had this beautiful breakout, right? So from this pivot right here to this pivot here, beautiful breakout. All right, and then we've also, in my opinion, confirmed and validated this this wedge structure that we've been trading in. Well, we've been trading in for quite some time, broke it bullish, and now we are showing signs that we should come back down towards at least, you know, this pivot over here at 21.5, 21.4, and maybe we could potentially hold that, and then probably kind of trade under this little wick down here, grab some liquidity down there, and maybe have continuation. However, you don't want to jump the gun too quickly, because you have to remember you're also looking at a weekly and monthly breakout, right? So let's go to the weekly time frame first. So weekly continuation, right? Broke through, had the 3 bullish candles, finally weakening here. Okay, so there's going to be very hard, not impossible, we do have 5 days left, I would say, very hard for this weekly candle to start taking out the highs here and then showing, implying continuation still. All right, so this right now is implying that we're potentially going into some sort of pullback or a consolidation, more likely a consolidation after a strong move like this, and then we'll see what the nature of that consolidation is as the weekly candle matures, but it's still very early in this candle. Okay, now the big one is the monthly candle. Monthly candle's closing in about an hour and 20 minutes, and this is very strong. Okay, so you had a continuous sell-off. Okay, multiple candles to the downside, selling off quite a bit. Then had a slowdown for a couple months. Had a bullish doji, and then you had a bullish engulfing candle engulfing the doji in the last couple months before it. Okay, so this is a very powerful candle. Now, this candle does imply that we do have continuation over the month. However, continuation doesn't have to happen, you know, exactly after that month. You could have an inside bar, which would mean you have a monthly candle that trades within this candle here. You could have a much more lackluster candle, similar to what happened on the weekly time frame, where you have a bit smaller, right? So you were going into here 21% or 20+%, almost 10%, and then this was just under a 5% candle. Same thing with the month. You have a very slow month. It happens. All right. However, this sort of structure tends to lead to a continuation on the monthly candle, tends to lead towards just the next monthly candle being another move up higher, similar to what you see here, right? Or similar to what you're seeing here. This is the best example. You have a 3 candle surge here. I am looking at something like that potentially happening, where over the next month here, depending on what the Fed does tomorrow, we may have a surge going into the, you know, into the first quarter, right? So, but again, this is why tomorrow's super important. Whatever the Fed decides, is going to have a long-term effect for the rest of this quarter and probably the next quarter on Bitcoin, stocks, etc. There's going to be a big deal on what's coming tomorrow. But the charts are telling me right now This candle is implying continuation to the upside, but depending on what's decided tomorrow, we could see this engulf and destroy Bitcoin if it's really, really hawkish news. But again, we'll see. This is what makes trading kind of fun. There's always some randomness you can't really predict, but that's why you need to have good risk management just to be ready for anything that you aren't aware of. All right, everyone, that is it for the recap. If you have any questions, make sure to ask me in the comment section below, or join the Discord. That's the easiest way to get in contact with me. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.